Hello traders, how are you doing? This is Alberto Alvarado, broadcasting from Mexico City. Today is Saturday, January 14th, 2017. My local time is 4 p.m. That means that is 10 p.m. GMT time. As I commented in yesterday's post, I was going to deliver a very short update today regarding to some technical issue about my trading. As you are already aware, I've been commenting in my webinars that Donald Trump factor is going to be the word of the month for the word of the year, and that won't allow traders and trading conditions to that will be far from create far from ideal conditions for trading. So we need to remember now one kind of a style that I like a lot to trade with, because that will be very useful for us during this year and maybe next years. It is this thing that when I open a trade, I usually prefer the trades that I see they have the potential one-to-one risk reward, instead of getting obsessed with finding in the very first place a trade that is 2 to 1, 1 to 2 risk reward, or 1 to 3, 1 to 5, 1 to 10. I know that this is going against the trend. Usually when you go to normal forums, or you go to pseudo gurus on trading, that the most likely things that they are not spending their time trading but selling courses, etc., is that you will find that they sell the idea that it's the only way to go the markets is to try to find the 1 to 10 risk reward things. In my experience, and I have 11 years, I'm not saying that I am the most experienced, and overall this is not the only way to trade. You should move away from people that tell you that there is only one good way to trade, and uh, curiously it's going to be their style. So first of all, there is not one correct style. It's a matter of personalities. So when I say that this is my style, it's as valid as others, as long as it works. For whom? For me. So the only thing that I do is to share that approach with you through my webinars. This idea of not being obsessed with one-to-one is because my experience has told me, and it has worked for me, that it's way more accurate to start with one-to-one, because that gives you a limit, a logical limit of 50% chances of being right and 50% of being wrong, if that could be told so, because it's not that easy. Using and opening a trade 50 with a one-to-one risk reward doesn't mean that you have 50% of chances of being wrong and 50% of the chances of being right. What it exactly says is that you are seeing a possibility that it's as high as moving in your direction that you are predicting, or that the trade, the asset, could move against that very exact same amount of pips or dollars. So that is why I believe that is the best way to start. Why? Because once you open a trade with one-to-one, after one day or even before 12 hours, you can actually, after seeing and after putting your toes in the water, testing the waters, you will see exactly if the trade started doing what you expected to do. And this is the clue in my style, that you can buy at a bottom at support, and you'll project a decent plausible and acceptable movement to the upside, meaning just because you put a trade that says that it will risk no more than 20 pips and you will grab 200 pips, that doesn't mean that is realistic. It depends actually on the market structure, and the most important thing, how the market reacted after you open the trade, because there is where you can see if you still have chances of that one-to-one, or you can start reducing the risk. And that is the clue in my style. You open a trade, you will see that way more often, since we're going to focus on lower time frames this year. And maybe I want to have the chance to explain it every time why I do that. So that is why I am recording this one. You will see during this year that I will be opening trades 1-to-1. That is my limit. I never open a trade with a risk 10 times the actual and what I expect the move to do. I'm not saying that's a mistake, but in my opinion, in my style, it wouldn't work. There are people that they put a 10 pip take profit target versus a 100 pip stop loss. I don't like that. I see that could have way more complexities and problems than advantages. That is why I don't do that. But if that works for anybody, for somebody, well, go for it. It's just not my style. So you're going to start seeing that. For example, I could open, for example, I'm not saying that I'm opening anything now, a bull trade on euro dollar with a 50 stop loss and 50 take profit target, more or less, in the 30-minute chart. So I let the trade to be open. I just chill out. I'm not watching the trade every second just to see if it goes against me or not, but I start checking it every 15 minutes, every 30 minutes. And after maybe more or less 3-4 hours, I will start seeing if actually that level is representing a good support that stopped the movement to the downside. Maybe after 12 hours, depending on the lower time frame market structure, I could then maybe say, okay, let's reduce the risk from 50 to 35. And then instantly you will start having a higher reward than risk trade. Why I do this? Because in my experience again, the markets are, as you already know, very unpredictable. So you need to give them the benefit of the doubt, give yourself the benefit of the doubt, and give room to breathe to reflect that benefit of the doubt. Because if you are giving something or somebody a benefit of the doubt, but you're not really willing to give tolerance to what they do, what they say, you're actually not giving them that benefit of the doubt. Markets are the reflective people, so you need to apply common sense approaches that you use with people in your trades. That is my style. And it has shown me that it works for me. So I keep doing that. So that is where eventually you will start having in the webinars explanations like, and there are several examples in other webinars of mine here in Dukascopy, is that if you go, and we have open trades, I remember a euro long trade. I believe it was before Donald Trump being elected. I'm not remembering right. I believe that we opened a trade with 100 pip risk and 100 reward, and I believe that it was 2 days after I reduced to break even. We took partial profits at a resistance, and that's another part of my style. I never open a lot and keep that lot intact until it hits my ideal take profit target. I start scaling out the trades. In some cases I scale in, but I'm not going to talk about that today. I'm going to talk about that tomorrow when I scale in the trades. When I am right in a trade with a 1-to-1, usually the first thing that confirms me that I can then start reducing the stop loss is if it hits my first take profit target. I take partial profits, and then I reduce my risk. Half of usually is the half or even more, or even to break even. If the market continues going in my direction, I simply lock in profits. So there is my concept of that is having risk-reward dynamic comprehension. Not necessarily you need to start from 0 to 100 miles per hour in 1 second. You start accelerating gradually. You start moderating or tightening the risks according to time. Of course, you cannot do that if you're always risking 70% of your account in one trade, because you will be so stressed that at the very signal that the market doubting, you will be doubting also. So it goes hand in hand. Trading the one-to-one risk reward initially to have an objective take profit target to scale out the trade, and then to move your risk to lower risk. It depends on how you manage overall the overall amount of money that you can lose in a trade. You need to find a level that you feel comfortable with. It depends a lot on your status, as your wealth status, because if you are a very wealthy person, maybe you can cope with account of $10,000, losing 30% of it in one trade, because those $10,000 are not really useful for you. But being realistic, that is the less part of people that could have that approach to trading. Usually is middle class people that are trying to have a second income. So you need to find a way that fits your style and your reality. Of course, the risk tolerance is very different from everybody. If you're going to, there are people that could run very high risks as long as the trade doesn't last more than 2 hours. But in the moment it goes a swing trade lasting 12 hours, 24 hours, they instantly panic. So they need to adjust their risks just because of they cannot go to sleep calmly if they open a trade under those circumstances and it goes a swing trade. So you need to find what it fits for you. But well, you can start with a traditional 1%, 2% of your account, etc. It is very relative, because as you can imagine now, if you risk, let's say 1% of your account in one trade, and it hits your first take profit target, and you unload about half of it, and then you move your stop loss at break even, that instantly, it's an infinite reward plus a zero risk trade, theoretically. So yeah, you don't have to marry with the idea that it will be always 1%, 2% in one trade at one time. That changes. The same way the market changes and it adapts to news and to comments, you will see that way more often with Donald Trump. You need to have the skill to adapt your approach to trading, your stop losses, how you manage a trade. It's a way more complicated thing, this money management concept, than the one that pseudo gurus that are way more busy selling courses than trading, and they use like a paradigm, like a dogma. You need to start with 1% risking in one trade 1% of your account, and that's it. So no, it's dynamic, it's relative, it depends on a lot of factors. So just wanted to remind you that, because this year we will have a lot of very difficult trading setups and scenarios. That this tool particularly is the one that will help us avoiding running unnecessary risks and capitalizing on smaller time and smaller movements, since the opportunities won't last that much. So just wanted to give you a reminder in this, because maybe you will start seeing me this week just trading or commenting on trades, making obvious that you remember this fact. So I would like to tell you that you can expect a second update tomorrow, Sunday, on when I scale in a negative trade. That it's again for a lot of pseudo gurus in trading. That's a complete nonsense. Well, in my experience, in my trading experience, it has worked. So that is why I share my opinions for you to have another kind of information, and then you can deliver your very own specific trading style and trading approach to the markets. Tomorrow will be about scaling in a trade, regardless if it's in profit or loss. Usually I scale in when it is in a loss, not a huge one, but a loss. I rather scale out while a trade is in profit, not scaling in. but it depends. I will explain more or less the function of scaling in. Tomorrow, it's a no-brainer, the scaling out. I do scale out when we are in a loss, but it's way less common. I rather, if I see my initial trade not moving in my favor, not being able to touch my first take profit target, I usually then rather to move my whole, to reduce my whole risk on that trade from, let's say, if it's a 1-to-1 100 pip stop loss, maybe I'd rather to move it to 35, but not scale out partially to maybe mitigate the losses, and I rather reduce the overall stop loss than just taking half of the profit, half of the losses, and leaving that very same stop loss. But it depends. But now I'm talking on generals, on what I do more often, and I will explain that tomorrow, these exceptions. But well, this is I just wanted to deliver this before Monday, so we can that you are reminded that this my trading style includes this personal way to understand the market. So thank you very much for listening. Remember that tomorrow you will have another update of mine before Monday. Remember to trade safe, be safe. This is Alberto Alvarado, and bye bye.